Hi everyone, welcome to today's video. So on today's video, I'm going to do two specific things. First and foremost, I will speak about why am I bullish about tech stocks, especially given current economic scenario. Second, I will discuss the stock that Mr. Mohnish Pabrai is extremely bullish about. It's a monopoly tech stock and he feels that it will 2x, 3x in the coming few years. So I will dissect that stock further and I will present my viewpoint. Along the way, I will discuss some of the prominent tech investing opportunities across India and the US. So stay tuned on this video and let us get started. So first and foremost, let me present my viewpoint as to why am I bullish about tech stocks, especially given the environment right now. So if you study the current macroeconomic scenario which is being played out by the Russia-Ukraine crisis and the looming impact of the COVID crisis, there are two specific issues that the world is grappling. The first issue is the high inflation issue that everyone is saying that hey, in India, across the world, in the US, inflation is going to be really high. So that's a problem for every company. Second, people are saying that there are going to be supply chain issues, that companies want to undertake manufacturing, but they are not able to manufacture stuff because the suppliers are not supplying enough material to them. There are extensive shortages around semiconductor, petrochemicals, bunch of other different goods that are required for manufacturing. But if you take a look at the tech sector, basically tech sector, number one, is somewhat isolated from both these crises to a very large extent. I'm not saying that tech companies are not going to suffer because of supply chain disruption or inflationary concerns, but what I'm trying to outline is that the impact of these factors on tech firms is going to be low. Number one, a large chunk of tech companies are B2B based. They are not selling stuff directly to customers. So B2B type of companies will have lower impact of inflation. So that is point number one. Even the brands that are selling directly to customers. So pick the case of Apple. Now Apple is a great brand. Similarly, Samsung is a very good brand. Similarly, Google or Microsoft, if they are launching some hardware devices which are being sold to customers, they are also excellent brands. So these brands are not going to get hit by inflation a lot. Again, I'm saying that it's not as if that these companies will have zero impact due to inflation, but the extent to which these companies will get hit due to inflation, that will be low. A classic case in point is Apple. If you take a look at its recent revenues, the revenue numbers have been up. The stock price has barely fallen. Why? Because Apple caters to top-line customers. Prices are already very high. If inflation is high, they will pass on the entire price rise to consumers. And consumers will still choose to buy Apple. So these type of strong brands are going to get impacted by inflation the least. That is precisely what is happening in Apple's case and a bunch of other tech companies. Final reason here is that the profit margins when it comes to tech companies is usually very high. Now, if profit margins are high, then firms have a lot of resilience in terms of dealing with any kind of downturn. And due to high inflationary concerns, if some tech companies have to absorb a little bit of hit in the short term, they are well prepared to do it. So from that particular perspective, this high inflation issue is not going to hit the tech market that much compared to other sectors in the economy. Second key reason, if you take a look at supply chain. Now, if you consider even something like Apple, now Apple is a high-end manufacturer, so to say. It can shift its contract to some other parties. Why? Because it already has a very high profit margin. So it can go and give that money to its new suppliers to create new supply chains very easily for it. And that is again the reason why Apple stock has not taken a hit much. That is true for majority of the tech companies, that tech companies, A, they do not require a lot of material to manufacture stuff. And even in cases like Apple where they do, the profit margins are so high that they can pick up that money, that additional money, and continue to maintain their supply chain properly and smoothly. So this is the reason why I feel that tech companies are well poised and well placed to deal with the current pandemic situation and also the inflationary concerns that are happening in the economy. Also, very recently, if you check the performance of some of the monopoly tech stocks, for example, Alibaba, I have been bullish about the stock. I took a lot of heat from many of you on that stock that Alibaba will get listed. This bad thing will happen, that bad thing will happen. And just a couple of days back, Alibaba in one trading session, it grew by 37%. 37%. It's not a joke. The reason why that happened was that Alibaba is a fundamentally sound stock. There was nothing wrong with a stock like Alibaba. It was deliberately being beaten down by running news after news. But fundamentally, from an economics point of view, there was no issue with the stock. On a side note, many of you might now want to take positions in Alibaba. Should you be doing it? Should you not be doing it? I still feel that Alibaba should give an upfront, even more upfront, but wait for it to consolidate a little bit. Because if a stock has given such a massive massive run up, it will come down a little bit, then you could consider aggregating it. Again, this is not an investment advice. Please act as per your understanding and your analysis. Okay, so now let's talk about the stock that Mr. Mohnish Pabrai is very bullish. Even I am very bullish about that stock. What is the name of the stock? The stock's name is Meta. I have made an entire video on Meta stock and here you can go and check it out. But I will give you some recent updates and also discuss Mr. Mohnish Pabrai's viewpoint around Meta. So let us listen to this clip very, very quickly.
When I look at Facebook is that I see a company which is that revenue is not going anywhere. Their cash flows are not going anywhere. I think those are pretty solid. I think the user base is pretty solid. So if I were to look at Facebook, I would say that even with 5 or 10% annual growth, which doesn't really seem like a big leap for them to get to, the stock ought to be a double at current interest rates. So I don't have any issue with saying that, Meta in 2 or 3 years is an easy double. I think that's a reasonable bet.
So there are 3 specific reasons why Mr. Mohnish Pabrai is bullish on the Meta or Facebook stock. First and foremost reason is that the stock itself has corrected quite a lot. And here is a quick recap as to how much the stock has corrected by. So at its peaks, Meta stock was trading at roughly $400 and corrected by almost 50%. And now it has started to go back up. It is very important for us to understand why was it that the Meta stock fell. The reason was that the monthly average users of Meta declined. It's not as if that its revenue declined. It's not as if that its profits declined. It's not as if that some of its fundamental business line went away. It's not as if that some of the major goals with which Meta platform was starting, it got disrupted. No such problems. Even the overall number of users went up. But the problem was that on the Facebook's platform, the monthly average user declined slightly, not much, slightly. And due to that change, the markets overreacted. That's my personal opinion. And the Meta stock fell by roughly 50%. So right now, Mr. Mohnish Pabrai thinks that you cannot go wrong with the valuation at which Meta is trading. So the stock is deeply discounted and Mr. Mohnish Pabrai is a deep value investor. So he sees a lot of value in Facebook/Meta stock. Now, the second key reason why Mr. Mohnish Pabrai is very bullish about the Meta stock is that the ad revenue part of Meta's growth story, it is still very much intact and the ad revenues are actually growing. So let me show you some numbers, and these are the numbers up until the third quarter of 2021. So you see this blue line, it has been constantly going up. There has been no dip here in terms of the ad revenue part of Facebook or Meta. Now, ad revenues are one of the most prominent business lines for the Facebook's business. As you can see that the advertisement revenue for Meta is very much compared to the other revenues that Facebook has. So as long as this first segment keeps on doing well, Meta stock is likely to do well. And Mr. Mohnish Pabrai feels that there is absolutely no problem in terms of the ad revenue business of Facebook. They have long-term sticky customers. They will continue to advertise on Facebook. And for a foreseeable future, the ad revenues from Facebook is not going to go away. So this business is strong. It is deeply discounted right now. Therefore, he is very bullish. Also, if you take a look at the latest result for Meta, what you will see is that the overall revenues have gone up both from a quarter-to-quarter perspective and year-on-year perspective. And again, this proves the resilience of the ad revenue business of Meta. So there are absolutely no problem with the stock. And what Mr. Mohnish Pabrai is saying that, hey, right now, if you go and buy Meta, you are getting the Meta part of the business for free because the ad revenue part is already deeply undervalued. So let me just illustrate this point by plotting it graphically. So here what is essentially happening in summary is the ad revenue part is deeply discounted. So if you go and buy Meta now, this is deeply discounted. This part is also very resilient and you are getting this business for free. So that is what Mr. Mohnish Pabrai is saying, and therefore he considers that if you just simply buy this stock, just leverage and benefit from the ad revenue growth, your investment will 2x or 3x in the coming few years. Do I agree with this? The answer is yes. Is this an investment advice? The answer is absolutely not. Please research and do your own analysis and only reach your own conclusions. Now comes the third and final reason why Mr. Mohnish Pabrai is bullish about it, or somewhat bullish and little bit skeptical about Meta. And let me cover that point. It has to do with the future business of Facebook, because Facebook realizes that ad revenue business, good. It is not going away immediately, but yes, 10, 15, 20 years down the line, this ad revenue business in Web 2.0 space, it is going to take a hit and they have to move to a metaverse. What is a metaverse? Metaverse essentially is a new planet that is being created. Again, please watch my Facebook video here. You will understand what metaverse is. And Facebook is trying to develop a social metaverse. Now, in terms of creating this social metaverse, okay, great. You have created an artificial reality, virtual reality type of a metaverse. You need like special glasses. You need like a special computer. You need like a special tablet or a special mobile phone to access that planet. Now, Google Glasses was one such experiment that did not do too well for Google. And Mr. Mohnish Pabrai thinks that Meta might also meet a similar future. And even Facebook/Meta does not know what truly metaverse is. So let's listen to his commentary and then I will give you my perspective.
In his opinion, at the current valuation of around 560 billion, he believes that just the ad business will give investors a fairly handsome return across the next few years. But it was interesting to hear that he isn't particularly excited about the metaverse side of the business. In fact, he says he views the metaverse side of the business as kind of an additional layer that he's not willing to pay for. And this is where the discussion got really interesting, because Mohnish went on to start discussing why he thinks the metaverse will not see wide adoption anytime soon. And Divya had some really interesting opposing thoughts. But let's start at the start. Mohnish's first main point was the form factor.
So Google Glass, I thought, was a revolutionary product, a big leap forward, very strong technology. So I think when you get to the ergonomics and what users are looking for, if things are even slightly off, they won't work. And I think that was the case with Google Glass. It was slightly off, whereas something like iPhone has been right on. But eventually, the device will change. I know it will change, and Meta is trying to go in that direction. The problem is that I believe the revolution is going to come out of some guys in a garage. I don't believe it'll come out of Facebook.
So his viewpoint is simple that, hey, if you are creating such sophisticated tech, there is a very high likelihood of failure, and this innovation might come from garages, not from Facebook or companies like Facebook necessarily. Might be true, but let's hear the other side of the argument from Divya Narendra. He has a solid understanding of tech and he has worked quite extensively with the Winklevoss brothers, and I will put a snippet here and you can go and check out his biography. So let us listen to what he has to say.
Like a Twitter or or any of these companies, like, do they have the firepower to develop the tech? And we're talking about sound, haptics, obviously the 3D kind of immersive experience into a form factor that's small enough to be adopted by, hundreds of millions of people or billions of people. That's really hard. The form factor was a huge problem for Google Glass. Like, that's one of the main reasons it failed. Obviously, the technology was worse back then. But when you think about what V2, V3, V4 of AR glasses is going to be, and when you think that these glasses are in a form factor that is already iconic, right? So when they partnered with Ray-Ban or Luxottica, they implanted all of this tech into the Wayfarer, which is the most iconic form factor of any sunglass in the history of sunglasses. You're not sacrificing aesthetics when you purchase that product. And you just kind of think through, okay, in a couple of years, like what that next version of that product is going to look like. And then you think about like who's in a position to develop that. Like it's not that many people, right? I mean, they spent over $10 billion last year on VR, AR, everything in Reality Labs. How many companies are in a position to do that and still have 35 to 40% operating margins on a consolidated basis? Not that many.
So Divya Narendra makes some really interesting points. Number one, he says that, the new age tech, AR, VR, it is maturing somewhat. It's not the same scenario as was the case with Google Glasses. The technology itself was very nascent at that point. Now the AR, VR, all these technologies have had a lot of adoption taking place. That's point one. Point two is that big companies like Facebook are already somewhat ahead in the race. If you need mass adoption of these products, you need these companies which can invest a crazy amount of money in the R&D. I definitely agree with this viewpoint more because the Reality Labs, which is a part of Facebook, it is amping up its R&D like anything. It has invested crazy amount of money in terms of research. Previously, what used to happen was that when it came to these garage-oriented innovations, it was somewhat of a norm simply because some new tech was being discovered. But if that tech has been discovered and if it has to be taken to masses, a big company like Facebook/Meta or Google or Amazon is now well placed. Yes, that inception of AI or VR might happen out of garages, but getting it to masses is something that a big company might be better equipped to do. So in summary, this is what I think about the Facebook/Meta stock. Number one, it is underpriced, no doubt about that. Number two, there seems to be no fundamental problem with the stock per se. Number three, the ad revenue business is going to stay intact for a foreseeable future. Number four, the meta part of the business can become its growth engine going forward in the future, simply because of the fact that Facebook has been early on it. No other big company is going after the social metaverse the way or the scale at which Facebook/Meta is doing. Their focus seems to be on that game. Yes, it's very likely that the risk profile is very high if Facebook tries to experiment and fails in this social metaverse narrative, or if some crypto players take a lot of lead in this game, then Facebook stock is going to suffer. It's going to be volatile. But will it fall a lot? I highly doubt it. So there seems to be much more upside compared to downside on this stock. Again, not an investment advice. Please invest at your own behest through your own research. Now comes the final part of the video, that what other tech stocks am I bullish about or am I considering buying? So I'm quite bullish about Amazon, Google at this stage as well. I feel that they are doing amazing work in terms of the new acquisitions that they are making. I will make a separate video on the new acquisitions that these companies have made, but the focus seems to be really good. There has been no dip in terms of the sales volume or the growth rate at which these companies are growing. Some key Indian stocks, I feel that something like TCS and Wipro are also good. Am I an investor in them? No. Why? Because I invest all my tech money either in US stocks or in the crypto domain. But yes, there is fundamentally no problem with TCS and Wipro. They are also going to benefit going forward. I don't know about the growth rate. It's very hard for me to predict their business model as of now, especially with the entire consulting game in tech becoming plug and play. So I don't feel very confident in terms of the future growth prospects of something like TCS. Right now, the business model seems fantastic, but I would love to learn from you as to what you think about the TCS stock. I will research more and I will present my analysis. Third and finally, in India, I am quite bullish about the gaming company tech stocks. For example, something like Delta Corp. I had already built a position earlier and I'm sitting on a huge profit on something like Delta Corp. Will I qualify it as technology stock? The answer is no. It's more of a gaming/casino stock for me. I will again study that stock further and try to build more position in case the opportunity presents itself. This is again not a buying recommendation for something like Delta Corp. The stock has already given a lot of run up since the time I had made the video last year. But to cut the long story short, this is a great time to be purchasing some of the tech companies, especially the ones which are in monopoly domain and especially the ones which are making profits and have a very clear business model. I hope you enjoyed the video. Please press the like button and I will see you tomorrow.